Hey everyone, Kirk here again at OptionAlpha.com. This is the weekend video update for you guys here. So, the first thing I want to do is talk to you real quickly and just let you know that if you're not on the email list or if you don't check the blog regularly, please get on the list right away because this week I'm going to be throwing out a post about the new Facebook IPO and what I think about where they're pricing the stock, if it's a good deal, if it's not a good deal, the whole makeup of the landscape, it's going to be awesome. It's going to take me a little bit to actually put the post together, and I'm still working on it, but I think this is going to be one of the biggest stories, obviously, of this year, especially for the market. And I think there's a lot of things that people are overlooking, and they're getting too emotional about Facebook. So, again, get on the email list. It's free to get updates. We don't spam every day, we send out updates once or twice a week. So that's the first thing. The second thing is we had a pretty bad week if you really think about it. One hell of a turnaround this week than we had over the last couple weeks of April. And what I have up here on my Thinkorswim chart is an intraday of the S&P for about the last month and a week or so, really since the beginning of April. And we've been in this tight range. I mean, that's really what we were kind of in for most of April, right? It seemed like we were just bouncing back and forth like a pinball for the better part of April. And we finally broke out of that as we started to get towards March, right? We had the breakout, we came back down, we successfully retraced this prior resistance level that's now acting as support, and it looked like we were going to be off to the moon, right? Again, higher lows, higher highs, looked like we were in a new trend. But what actually happened is that we turned around and check this out. We gave back everything we gained the prior day in one day. That's amazing. And that right there tells you that we are completely rejecting that upper level, right? So if you're looking at this on a technical basis, right, you see the higher lows and the higher highs, right? You have a low, another low, higher low, and then you have highs that are all making higher highs, right? Looks like a great uptrend. But as soon as you give all that back up, and in fact, if you give it up in one day and you come right back down here to the prior area of support, and now you make even lows, and then after you make that even low here, you didn't even quite reach up as high as you did before, right? You're not going higher highs and higher lows. Now you're putting in lower lows. Then you know that something is around the corner. And so that's what we saw. And it was kind of not obvious because I didn't think we were going to sell off as hard as we did the last day here on Friday. But it was kind of obvious that it was losing steam, right? You have this kind of rounding top feature to it it's just rolling over. And so now we've gone back down into downtrend mode. On the daily chart, we're definitely not in a good place right now. It looks like we could see some more selling pressure. We've got a lot of room to go on the bottom side before we hit any major support. The next major support really isn't until about 1360, 1355 on the S&P. Now, what I really want to drive home, at least in this quick video, is just how important some of these levels can be, at least on the daily chart, right? The daily charts are really helpful to you as a trader because you can see some breakouts and retracements. And I'll just put up this level here, which is about 13, let's call it 93 on the S&P. And you can see that we had hit this level before as prior resistance, successfully broke above it on strong volume, and we came back down and retested this level numerous times, right? So as a trader, you should see that once we break this level on the daily chart, and look at how hard we broke down, right? We broke down hard. It wasn't that we came down and kind of touched it and traded around 1392. No, we broke it all the way down below 1390 and we came right back up and retraced it right there. And that was kind of the great signal that you could have made that either you don't go long or you start getting into shorts and start hedging your protection. So that obviously led to the massive sell-off that we had on Friday for the markets. So where do we go from here, right? Well, let's take a look at some of the daily charts and some of the technicals. So on the daily charts, let me just get some of these drawings away. All right, so on the daily chart, what we're looking at is, again, like I had said before in this video, is that we're actually starting to make lower highs. And that's going to be the real key point here going forward. So we had higher lows, higher highs the whole way. Now we're starting to make lower lows, or even lows, and lower highs. So we're starting to form this rounded top type of pattern, right? Kind of, the inverse of a cup and handle, really. What I think is going to be the next major level is around 1350, 1360. That's going to be the line in the sand. If we can stay above that, then there's a chance we could continue higher. But right now, the way things are looking with unemployment numbers, jobless participation rate, everything in Europe that's still continuing to happen, Spain, et cetera, we really need some good catalysts in earnings to really finish out the season. Earning has been good, but it's been good because people are cutting jobs, right? So eventually that stuff has to come back and catch up, right? Earnings can be great, but is there real growth, or is there just a constant maintenance of profit margin via cutting expenses and cutting jobs, right? Declining revenue, but if you cut jobs just as fast, you can still maintain a good profit margin. So I think 1350, 1360 is going to be the major line in the sand. I think once we break that, I think it'll be a pretty quick rush down to about 1300. And after 1300, we'll just head right back up and retest that area of support. So 1300 is going to be the next major area of support. It's really what we had as major resistance going forward. And just generally, this whole 1275 to 1300 level has been good support for us in the past. So if we do break below this level, we'll rush right down here. It'll be a very quick and violent move, and then we'll move right back up and retest that area. Okay, so that's really what I'm looking for going forward here. If we take a look at just two other charts, obviously the VIX has started to move off the lows. This is good. This is good for option traders like us. And I think if we can start to see the VIX get back up really strongly above 20, it's going to be a really good opportunity to start adding at least some of the up calls, some of the call spreads above the market as the market sells off. This is a great time to add those premiums in. The other thing I want to take a look at is USO. This is a chart for oil, and you can see that oil has really had a bad couple of days and kind of bucks the major trend that we've seen in oil over the last 4 or 5 months. We've seen a pretty steady rise in oil prices, right? This is a really good trend line, actually, but we've seen a pretty steady rise in oil prices, but this is kind of breakaway type stuff, breakaway volume and trading. And if you look back historically, right, this kind of breakaway stuff that happened back in May of last year, ironically enough, during the same time period, led to a pretty good decline in oil prices all the way through October. I mean, look at this. We had just that one really bad couple of days right here, these couple of days right here, where oil prices had a huge drop. And although it hasn't been as bad for oil just yet, those 3 days could really start a good long trend lower, right, into the low mid 30s for USO and for oil generally. So the breakdown below 100 for oil is definitely something that we need to watch. This is obviously going to be good for the economy, right? Bad for traders, bad for equity markets. But it's something that kind of stands out on the charts. And I really haven't even talked about oil lately because you can see, I mean, more or less the last couple of months, I really haven't done any videos on oil because it's been trading in such a tight range. I mean, it hasn't really been as active as it usually is. But I think that's all starting to change as we start to break lower. So that's going to be something to watch for, obviously, in the oil markets. Okay, so I said two other charts, but I'm just going to throw up one more here for you guys, and this is a chart of the 10-year notes. Okay, this is important because I think that bonds are getting a lot more activity than they actually deserve. I think they're being saved, more or less. They had a pretty good sell-off last month in bonds, and now we're starting to see bonds start to really recover. We're kind of near 5 years, 6, 10, we could be near even 20-year lows. I know mortgage rates are really low. So you know that people are taking money out of stocks, at least for now, and throwing them into bonds or cash. So that's what you have to be concerned about, is that if we don't see equities start to recover, watch the bond market and see what that does first, right? If you see the bond market continue to improve, that means that they're rushing for this safe haven trade. 10-year note, 30-year notes, it's a really safe trade for bond traders. So they're rushing their money into this security, taking it out of equities, which are a little bit more risky right now. So I think the bond market could give us some little insights and glimmers into what may be happening in the equity markets. But as bonds continue to improve, that's obviously not good for equities, at least right now, right? When we saw equities start to really take off is when bond prices dropped. When bond traders move their money out of bonds into more risky assets like equities, which are stocks and options and the like, that's really good for the equity markets. But right now, the strength in the bond market really kind of tells the whole picture about why it's been so weak in the equity markets. So again, hopefully you guys will come back and check out this post on the Facebook IPO. Starting to gather a lot of data for it. I have a very, what I thought in the beginning was going to be a good opinion, and I've kind of actually switched my opinion around since I started gathering data and found out about pricing and how it's all shaken out. So it's going to be really interesting. God knows that the day that it IPOs is going to be one of the craziest trading days of the year. So hopefully you guys all take part in that and check it out. So as always, hope you guys enjoy this video. Please add your comments to the video or to the post as always, and we'll talk to you later.